Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a wonderful day so far and a great week. Today we're going to be diving into our daily cryptocurrency market update, and we've got a lot to share with you in this video. Some really important things happening today, like the US CPI data coming out. This is looking very likely to be higher than the one that we had for February. And in actual fact, rather ironically, high inflation isn't good for the cryptocurrency market, because the cryptocurrency market, along with your equity market, certainly your big indexes, are very much moving on speculation of interest rate hikes, which is why we've seen a downturn in all markets. And I'll show you that right off the bat. We'll bring over the Nasdaq here to show you the kind of correlation. And in actual fact, if we have higher inflation and the Fed look to do tighter measures than they've already sort of outlined, and they're being very hawkish at the moment as it is, that could see markets spill and see further downside. But we'll talk about it all in this video. You guys know that we are always cautiously optimistic on the crypto space. Certainly at the moment, we're very optimistic on crypto long term. You know, I think potentially the back end of this year is when we're sort of coming out of all of this. But there's a lot of uncertainty and a lot of other factors at play within our market due to some of the actors that are now present, your institutions and such, which is why we've really seen that correlation. So we're going to get into it all in this video, looking at a few different cryptocurrencies and, of course, talking about the macro and a number of things associated with it. Maybe play you this clip very briefly, talking about extraordinary elevated inflation data. 9% potentially. That would see the Fed, in my opinion, bring in tighter monetary policy that would potentially have a downside on all markets. So let's start off by taking a look at the overall crypto market. Still seeing a continuation sort of the bleed out that we saw. We'll dive into Bitcoin on a small time frame before I sort of bring up the Nasdaq over it. One thing that we sort of very much alluded to was we'll use the 4-hourly. Isn't it funny how we've drawn this trend line for you guys? We won't use the 4-hourly actually. We'll use the daily, sorry guys. Isn't it funny how we said to you, and we've been saying, look, when we were back here, you don't want to come back down to this trend line and you don't want to break it. So far, as if by magic, there is definitely credibility to doing TA and charting, guys, because some key levels do often get drawn to. And the reason being is TA is almost a bit of a self-fulfilling prophecy in the sense that most people look at it for entries and exits. Isn't it funny how we were highlighting the lower end of this trend line and you have actually bounced at it? Do you see a similar thing to what you saw over here? It's really, in my opinion, this market is so driven by the kind of inflation narrative and the interest rate hikes that are going to accommodate that if potentially, CPI doesn't come out as bad, I actually think you could see crypto see an uptick. I think if it comes out bad, people are going to expect the Fed to be more hawkish than they've currently been, and you could potentially see further downside. And then if we do get that further downside, of course, you're looking at these sort of lower levels here. As potentials, not probabilities yet. We're still technically in a kind of maybe a new trend here, putting a high and at the current moment a high low, but that could be invalidated, and you could go on to sort of invalidate what could be a potential breakout of a structure. But this is just so dependent on macro markets, and I'm going to show you that right off the bat, guys. And then we'll move on to sort of everything else. Take a little look at Ether and, of course, ADA. We're going to put the Nasdaq. We'll just use one of the mini futures. We won't bother using the actual. In fact, we'll use the Nasdaq. Not that Nasdaq. Where are we at? So just to show you the correlation here, guys. We're going to put it on log. We're going to stop drawing all over the chart. We'll also change this to, bear with me. So to show you the correlation, we've said March 2020 was an extremely significant event because it saw all assets essentially get inflated by the increase in the monetary supply, and it go, in many cases, directly into assets. Crypto is also a beneficiary of that. So huge inflation. And now we're at the other end of it. And really, the difference is, of course, crypto's in the blue. This was fundamentally internally driven, this crash and capitulation. This pullback that we've seen recently from the sort of 65K top was structured just like your Nasdaq. And the Nasdaq's really got hit hard. So you kind of want to almost ignore this little kind of pariah in May, and really just follow, it's very, very correlated. And this is why we're paying so much attention and trying to sort of raise everybody's awareness on macro markets, because it's very much what's driving the cryptocurrency space. Cryptocurrency isn't moving off its own fundamentals. If it was, the price would have gone a lot higher already. And we've been in many situations like this previously throughout Bitcoin's life cycle, where the news just simply hasn't been moving the chart. So to show you that correlation, we'll move into the macro in just a second, and why, there may be room for a bit more downside if the Fed decide to act a little bit tougher. We've also shown you the correlation on that interview that we did with David Bell, talking about, how speculation and interest rates for the year being priced in have already affected not just crypto, but markets generally. Yeah. What happens if there's unexpected rate hikes? That's my thinking. Do we see that more downside on the back end of that? I think it's very probable. Long term, we're very bullish on the crypto space. Short term, I'm talking the next 3 months or so, we do think there is a bit of turbulence. But remember, this space can change on a dime. And some of the factors that we spoke about at the start, if we have a underperforming in terms of over expectation CPI, that could actually be good for the crypto space. But I think a high inflation, it's very ironic, high inflation, which really should be the breeding ground for Bitcoin to excel for what it was built to do, actually isn't great for crypto and its price. Certainly not in the short term, I don't think. Ethereum actually looks all right. We're not really too worried about Ethereum at all. And the likes of Cardano, you're at a very significant level right now, or under a very significant level right now that we need to get above. But both rallies to the upside that we've seen today are weak. And the issue that you've got, we'll use Ethereum example, is this move right here, this green candle, does not equate to the pressure of that one. So we've not seen a kind of uptick of that. It's basically showing weakness. And this is all very much, again, centered around the kind of macro picture. Let's talk about the macro picture. White House says it expects inflation to be extraordinarily elevated in a new report. The Biden administration is bracing for the Labor Department's Consumer Price Index report to show that inflation is extraordinarily elevated. The Consumer Price Index, or CPI, is one of Wall Street's favorite ways to measure inflation. The CPI reading for March 2022 is due out Tuesday morning, so we're going to get that today. Of course, America is still somewhat waking up. We expect March CPI headline inflation to be extraordinarily elevated due to Putin's price hike, says White House press secretary. This is something that we've actually spoke about. I think the inflation that we're seeing actually hasn't, what Putin's doing and Russia and Ukraine hasn't even been factored into inflation yet and the CPI. I think that's all still to come. I think a lot of the problems that we've had are from previous issues, and now we've got this new one that's going to see inflation push up. And the real question is, what do the Fed do as a result of this? White House in damage control mode as crypto market braces for 8% plus inflation. White House blames Russia, war with Ukraine for extraordinarily high elevator. Of course they do. They won't take any responsibility in this, of course, like a good politician. You also have here, Fed's Brainard says balance sheet reduction to happen rapidly. The speech comes a day before the Federal Reserve Open Market Committee will release minutes. It's March meeting that will provide more details about the central bank's plans. Very much looks like a soft landing might be out the window. I think they're going to have to move rapidly now with upping interest rates and reducing the balance sheet, because they're going to need to get off the zero mark. They've only upped it by 25 basis points, 0.25% today. They're going to need to move fast, in my opinion, because they're going to need somewhere to go when things start to break, and that will, of course, be down and back to stimulating the economy. So that's the positive, really. There's huge opportunity coming in all this, I think. But right now, we're very much at the mercy of the kind of macro tides, and that's definitely something you guys have all got to pay attention to. Watch the US CPI print 9% plus. The White House has the data before official release. White House warns of extraordinary elevated inflationary data. That does not, so far we've seen that high inflation's actually had a very negative effect on not just the crypto market, but your equity markets. If we have a higher inflation that we've already had, it kind of leads into potentially more downside to come. All stuff that's well worth talking about as a cryptocurrency investor. Certainly if you want to be a serious one, you now need to pay attention to the macro picture. As hopefully we're doing in these videos, it's really trying to illustrate that that's what's driving our market. Yes, it sucks, but it's the game that we play, guys. And if you want to play a game, it's good that you get to terms with all the rules surrounding it. And could we actually have this sell-off across the board been, you know, somebody already knows what the inflation data is and they're kind of preempting that and kind of preparing, and they've took money off the table for it. You know, that's certainly a potential sort of play, in my opinion, that took place over yesterday, really, you know, Monday. So that's really all I have for you in this video, guys. Try and stay positive out there. We will get through this like we always get through things, but there might be a little bit of turbulence before we get to that point. And like I say, I still think crypto could come out on top this year, certainly towards the back end of it. But that's really all I have for you in the video, guys. If you've enjoyed this content, like us, always appreciate it. So as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Don't forget to subscribe, guys, and click that notification bell, and I'll catch you all in the next one. Thanks a lot for watching, ladies and gents.